Hello, everyone, and welcome to this week's educational presentation, where today I'd like to talk to you about 3 exit strategies that will literally change the way you trade. Now, the best thing about today's presentation is that the 3 methods that I'll be sharing with you today, you can actually start applying as early as today, as soon as we finish this presentation. Now, let me share with you an example and show you what I mean here. This is why a lot of traders fail, not because they have a faulty method or because they're not experienced enough. It's many times they have a faulty exit strategy. For example, looking at this older chart of FANG, F-A-N-G, first of all, it looks like it's doing nothing, but let's say your strategy generated a buy signal right here, okay? So you get into it, and like most traders, if you have a profit, you start asking, well, where do I get out? You don't have any idea what to do or how to protect your profits or how to, exit with a nice gain. So you say to yourself, well, I'll listen to that guy on TV. Maybe he knows better than I do. And you listen to him and he says, hey, this has projections of going much, much higher. You have to hold on. Some earnings are going to come out or some announcement, which will make it literally explode. And there's no way you can lose. So you hold on, maybe even buy some more. And then this happens, right? You not only give away all of your profit, but now it's turned into a loss. Well, one of the methods I'll be sharing with you today actually would have generated an exit signal right here, just ticks away from the very top. You could have potentially captured a 25-point gain and bypassed all of the losses that happened just days after that. So this is what we're going to be talking about today. 3 exit strategies that will change the way you trade, and this was one of them right now. So welcome, my name is Steven Primo. I am the president and founder of Specialist Trading. I've been trading now for 48 years. I started trading on the floor of the Pacific Stock Exchange, where I was on the floor for 16 years, and 9 of those years I was a specialist. Specialist is someone who made markets in roughly about 50 or 60 stocks. So I was a specialist for 9 years, trading through the crash of 87 and the bull market that followed. So in my nearly 5 decades of trading, I've accumulated some of the best methods, tips, and techniques and strategies that really will help turn your trading around. They're all rooted in consistency, but most especially in simplicity. So this is what we teach our students around the world. And I'm thankful now that we have students in over 115 countries and in virtually every state in the United States. And we're elevating your trading by teaching you these things that really have a high level of consistency. That's the purpose and the service that we provide, simply educating traders so that you can ultimately make your own trading decisions. And today I'm going to give you 3 different variables for exits so that you can make your trading decisions based on which one makes you feel the most comfortable and the most confident. And you'll see that in today's educational presentation. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 3 exit strategies, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are an educational company, all examples are strictly for educational purposes only. Now, another way to get more education on a daily basis is to follow us on X, formerly known as Twitter. There's our handle right there, abbreviation for Specialist Trading. You may want to copy that down. Every day I post between 5 and 7 different snapshots of signals that our methods have generated, also little bits of financial wisdom. And as well, if you're following us and watching us now on YouTube, please hit the subscribe button. That way you get a lot more content in the future with us giving presentations this way. So there's lots of ways to follow us and lots of ways to get more education either through X or by subscribing to us on YouTube. Okay, now remember, we are an educational company. Therefore, I'm really a mentor. I'm not, if you, I know so many presentations and webinars you go to, you're looking to find out what somebody thinks the market's going to do. Is it going to go higher? Is it going to go lower? Or you're looking for them to tell you what you should do with a certain stock. Should you buy this? Should you sell this? That's not what a good mentor does. You see, a good mentor does not trade for his students. He teaches them how to trade so that ultimately they can make their own trading decisions. Now, this is the way I was taught some 5 decades ago and what I believe has sustained me. And hopefully educating you as students of mine will be able to do the same for you. Okay, so once again, the service we provide is by giving you all these high-level, consistent methods and techniques so that you can ultimately make your own trading decisions. All right, with that stated, let's begin. And today's theme is something that my mentors taught me. And they said, Steve, having an exit strategy can avoid unnecessary pain. Because think of it, in my nearly 5 decades of trading, one of the most painful things to experience in trading is to have a winning trade and then give it all away, right? It's one of the worst feelings in the world because for that short period of time, you were making money, but it was all on paper. And either you didn't exit properly, you got in or out too early or too late, and it turned into a small gain, or maybe it even turned into a loss. So having an exit strategy that's really rooted in simplicity and consistency can actually avoid that unnecessary pain. So this is what we're going to be sharing with you today. There are two main types of exits. All right. Exits fall under these two categories. The first is a fixed category or a fixed exit. So what does this mean? Well, this means that when you enter into the trade, even prior to entering into the trade, you know exactly where your exit placement should be. You know exactly where you should place your order, a limit order to exit the trade. And oftentimes, as I said, this will even be made apparent prior to getting into the trade, because it's fixed. You know where you're getting out in advance, all right? That is the main characteristic of a fixed exit. The second category is a dynamic exit. Now, this is actually the opposite. You don't know where you're getting out. In fact, you can initiate the trade, you can be in the trade for a couple of hours, a couple of days, or even a couple of months, and you still have no idea where you're getting out. The reason is because you are letting the market tell you when to get out. And so it's fluid, meaning that you are going with the ebb and flow of the market to decide when you should be getting out. So there are two entirely different ways of exiting, two types. It doesn't mean that one is better than the other. So I don't want you to think that, well, I guess I should be this certain type. No, the only thing that is wrong with these type of exits is when you're using one that doesn't meet your standards or your persona, doesn't make you feel comfortable. If you feel comfortable with having an exit prior to entry and knowing exactly where you're going to get out, then obviously use a fixed exit. If you feel comfortable letting the market tell you, then obviously use a dynamic exit. The only time it's wrong is when you're letting someone else decide for you and you're using a certain type of exit category, which doesn't make you feel comfortable. You don't feel as if that really works for you. So this is why we're presenting you these different types of exits today. All right, so let's talk about exit strategy number one. And we call this previous high, previous low. All right, so how does this work? Let's look at this older chart here in FANG. Once again, we looked at it earlier. Now, let's say you are a student of the markets, but you like to trade candlestick patterns, all right? So you're looking at this stock, and lo and behold, what do you find here? A bearish engulfing pattern. Now, that's a very negative pattern, usually calling for some type of trend change or reversal. So since we've been going higher, this is telling you most likely that you should sell. So how would you use this first exit strategy? Well, once you decide what you want to do, in this case, you would be selling or going short. Now, when we say sell, as traders, we don't mean we're selling to exit a position. We mean we're going short. We're betting that whatever market we're looking at will be going lower. So let's say we're selling short FANG right here based on this bearish engulfing pattern. Where would we exit? If we are the type of trader that wants a fixed exit, we would use this first category, previous low, all right, which is right here. The most recent previous low would be right here, where you had this kind of a lower low, lower low, and then higher low, that type of scenario. This would be the previous low. Now, what you would do is place a limit order to cover your short position right at this previous low. Now, some traders like to put it a little bit above, some a little bit below, some would even wait for it to close below. That ultimately is your choice. Once again, whatever makes you feel the most comfortable. Some traders like to wait for it to close below there if you're going short. Others say, no, I feel much more comfortable just putting it 2 to 5 ticks above. It's entirely up to you, but for just simplicity's sake, let's say we're going to use the exact price of the previous low, okay, just to make it simple here. All right, so we place a limit right here, and within the next week, look at it happen. We got right to that point, and as you'll often find, it's not guaranteed, but oftentimes you'll see price bounce off that level. So that's why a lot of traders like to use this particular method. All right, so you have a nice trade there, okay? You got a nice profit in a week. You had a short, let's say you bought the puts. When price reached that level, you would exit your puts and take your profit. Now, your strategy, one of your other strategies also generated a buy signal here. Let's say based on some indicator, not based on any candlesticks. So you say to yourself, okay, I'll do the same process. Now, in this case, since we're going long, we want to exit at the most previous high, which would be right here. All right, so you would place a limit order if you were using the previous high point, not the previous high close, just the previous high right here. Once again, once you practice with this for a while, you may say, well, you know, the stocks I look at or the market I trade, it sometimes doesn't get all the way there, so I'll put it a little below. Okay, that's fine. That's your choice. This is what we encourage. Or some of you may say, you know what, I found out with the markets I trade that it actually will close above here. That's fine. Wait for the close above there. All right. Either way, you're in charge. But using this previous high, previous low method, it is somewhere right around these most recent highs. So let's say we just, for simplicity's sakes, once again, just pick the exact high. All right, so we place a limit there, and let's watch the trade unfold. In 1, 2, 3 days, we exit with another profit again, okay? Now, one thing I want to tell our students is that this is not something that is miraculous, that it will get right to that point and then change the way it did in the previous scenario down here. Oftentimes, you'll see it get to that point and continue higher. This is where beginning students or novices say, hey, this doesn't work. I got out and look how much I left on the table. Well, remember, this is why we tell you to experiment with these and to paper trade so you can trade what makes you feel more comfortable. And oftentimes it'll go up for a little bit, but looking back in hindsight, once it did fall out of bed, let's say you had held on thinking it was going to go much higher and turned into a loss. Wouldn't you, in hindsight, have been happy to have exited here? All right, so if we look back and review exit number 1, it's a fixed exit. If you are long, you will exit at the most recent short-term high. And if you are short, you will exit at the most recent short-term low. You'll know exactly where these levels are even prior to entering the trade. That's how simple it is, okay? Let's move on to exit strategy number 2. Now, this is a 5-period SMA application. This is a dynamic strategy. Let me show you how it works. Once again, looking at our old friend here, FANG, F-A-N-G, this is the beauty of it. I particularly wanted to focus on one chart only to show you how you can transpose these different strategies onto the same chart. So we're using this same entry point right here. This is based off an actual strategy buy signal. But in this case, rather than looking at the most recent high, we're not concerned with that. This is a dynamic exit, meaning we're going to let the market tell us when to exit. So how do we do that? Well, we apply a 5-period simple moving average. So once we are in the trade, all we want to do is track it. And if price is above the way it is here, if it closes above, that's fine. But we're only going to sell once price closes below this 5-period moving average right here. All right. So far we've seen that it hasn't even touched the 5-period moving average. So we're okay. You see how we're letting the market tell us. So we don't have any idea where we'll be getting out. Now, we continue to be above the 5-period moving average. Now, at this point, this is where students make a mistake. They say, well, Steve, I sold it because you said, wait for it to touch the 5-period moving average. No, the rule is, I mean, you can alter it if you like, but the rule is it has to close below the 5-period moving average. And as you can see here, it intersected, but it did not close below. So you're still long. And that's a wise choice because look what happened. It kept going up higher and higher. Had you sold here, you would have been kicking yourself saying, why did I get out? And then you would have realized you weren't following the basic rules. Now, once again, you can change them according to your own means. That's fine. But based on the primary rules, you would still be in this. So it continues to go higher until right now it starts to go lower. Now it closes just a little bit above, but what do we have here? Now we closed below. Okay, so at this point, you have two options. You can use exit A, which is basically sell at the market. You would be basically exiting right here on the close. All right, that's fine. Or the more conservative exit B, which would be you would place a little line below here, just 1 or 2 ticks below that bar that closed below, and say, once it trades there, I'll exit. Okay, I need confirmation that it's going lower than this bar's low. So one is more aggressive, saying like, okay, we exited, I'm getting out. Another one is saying, okay, listen, we closed below here, but I'll wait for it to trade below the next day. So let's see what happened. let's say we used exit number 2 and we are staying in the trade. Well, on the very next day, it actually opened below. So we would have exited on the opening right here. We would have exited right here and been out of the trade. Now, using exit number 1, or exit A, I should say, well, we would have had a better price. But either way, it was right to get out right around these levels, because look what happened after that. It went straight down. Okay? So let's review exit strategy number 2, which is a dynamic exit. If we're long, we want to plot a 5-period simple moving average and exit on the first price bar that closes below the 5-period simple moving average. We have 2 options. A, we can either sell at the market, and that's it, we're out, or B, we can wait for price to trade just below that bar that closed below the 5-period moving average. Now, if we're short, if we went short, we're going to exit on the first price bar that closes above the 5-period simple moving average. Once again, you can use plan A or plan B, it doesn't matter. Now, this is a dynamic exit because obviously you're waiting for price to close below or above, so you have no idea where you're getting out. Now, remember, we're not talking about stop placement. This is just exiting with hopefully a gain, all right? You obviously should have a stop in place prior to even getting into the trade, so knowing exactly where that should be as well. But that's another class. That's for another day. Okay, let's go to the third and final exit strategy, which is exit strategy number 3. And this is one of our most popular methods of specialist trading. This is what we call range extensions. So let me share with you what we're talking about here. Once again, our old friend Fang here, all right? We have our buy signal right here. Now, whenever you have a strategy buy signal, it doesn't matter, it could be a sell signal. Whenever there's a strategy signal, okay, it doesn't matter if it's a buy or sell, it doesn't matter what the strategy is based off. It could be fundamental news. It could be based on moving average crossovers. It could be based on the full moon. It makes absolutely no difference. But whenever you have all of the rules and requirements come into place and they've all been met, that's called your signal or setup bar. And as we see here, when we had a strategy right here above a signal, above this green arrow, this is our signal bar or our setup bar. So with this particular method, what you want to do is measure the range of this setup bar from top to bottom, okay? And this is called your 100% range. Now, when we say top to bottom, we don't mean from the open to the close. I don't know, for some reason, a lot of people think that's the range. The range is from the extreme high or the top of the wick to the bottom of the wick. And let's say, for all intents and purposes, this is 10 points, okay? Or 100% equals 10 points. So what you want to do is take that point amount and then simply add it. And this will give you your 200% exit level, okay? Now, if you're the type of trader that wants to get in and out quickly, you would exit at this 200% exit level. Now, if you are more of a swing trader, you would take that same point range, 100%, or let's say 10 points in this example, and add it again from that 200% level, and that would give you 300. And if you wanted to do it again, you would add another 10 points, and that would give you 400. Now, these are the type of traders who are more like swing traders. They want to stay in the trade a little longer, maybe weeks or perhaps even a month. And so you would use these exit levels. Now, finally, you can use one last exit level, take that same amount of points here, in this case, it's roughly about 10, and add it, and this would give you the 500% exit level. This is where it's the best case scenario, where you feel like it's really going to move. And if you've done your homework, you've watched the stock or the market you're trading, you feel this is where you really think it's going to go. That's the 500% exit level and the largest level you should take. We often tell our students, especially in the beginning, if you're going to be using exit strategy number 3, the range extensions, you should get out of your entire position at the 500 or final exit level, because most likely this is where the trend will change. So let's say you decided after doing research, you said, I really like this stock. I think it will get up to this level. All right. So the good thing about this particular method is that you can, trade it different ways. A lot of our students will say, well, listen, I purchased 500 shares. I'll sell 100 here. I'll sell 100 here, 100 here. Maybe I'll sell the last 200 here. Or maybe when it gets up to the 200, if my stop was somewhere here, I'll move my stop to unchanged. Once it gets up to 300, I'll move it to 200 and so on, and just track it and ultimately exit at the 500. There's lots of different ways to do it. Once again, we share these with you in our course so that you can ultimately make your own trading decisions. That's how you become a consistent trader, not by going to a website and saying, okay, what do I buy? Where do I sell? Where do I place my stop? That's a recipe for disaster, in my opinion. You have to learn what these different variables are and then execute them yourself. That's how you become consistent. So let's say you decided to choose the 500 exit level, okay, right here, and you placed a limit. You entered here. You place your stop somewhere down here, and you said, I'm going to exit here. Well, in the next 2 weeks, you exited with a nice 25-point gain. And remember, we always tell our students that at the final exit level, you should be exiting your entire position because that's often where the trend changes, as you see right here. Okay, let's review exit strategy number 3. This is a fixed exit because you know where these levels are prior to even getting into the trade sometimes. So if you're long, if you bought the stock or whatever market you're looking at, even if you buy the options, measure the range of the setup bar. That's the bar that all the rules and requirements are met, and then add it to the bar's high. These are the range extension exit levels that you can pick and choose from where to exit. If you're short, well, you do the same thing. You simply measure the range of the setup bar. That's the bar where all the rules and requirements were met, telling you to go short, and then subtract it from the bar's low. These are the range extension exit levels for you to choose from. So there you have it. These are the 3 exit strategies that I personally feel will change the way you trade. We've had so many responses from our new students, especially who have never been able to trade this way. They've said, boy, I never realized you could exit these different ways, and it's changed their trading around tremendously. They went from average traders to very highly consistent traders, and there you have them for free. So feel free to start experimenting with them, but I would highly suggest and actually recommend that you paper trade first, because you won't know which one best suits your needs. Everyone trades different markets, everyone trades different time frames, and some of us would feel that some of these will work better in certain markets than others. So feel free to experiment, to pick and choose and see which one feels right for you, and then stick with that particular method. Now, a lot of students say, Steve, this is great, but I don't have a strategy to trade. In other words, the strategy I've been trading with is terrible. It loses so much money. It doesn't even make enough for me to even apply these exit strategies. Well, we have a great offer for all of you attending today's educational class. We're going to offer you what we call our Secrets of a Stock Exchange Specialist trading sessions, okay? These are 3 hours of trading techniques plus a full strategy. So if you don't have a strategy to trade with or that you feel confident in, we're giving you actually the complete rules, entries, exits, stop placements, all the different variables for you to choose from in a very highly consistent method. Now, in this 3 hours of trading techniques, this is the video that we will send to you. You'll get more high probability trading edges for entries, exits, and stop placements. We'll tell you which indicators not only to use, but more importantly, which ones not to use. I go into detail and the big difference between a system versus a strategy. I share with you what I feel, what I've learned in nearly 5 decades of trading, what the most important chart pattern is that you should find and have on all of your strategies. But here's the most important thing of this 3-hour video course. We're going to give you the complete rules to one of our most consistent methods, strategy number 1. Now, let me share with you some of the highlights of this particular method, strategy number 1. This is a pullback method. It's designed to buy at lower levels and to sell at higher ones, all the while within the realm of the trend. So let me share with you some older examples here, okay? These are strategy number 1 examples. Let's look at this older chart of PLTR. Obviously, it's going up. The trend is up. Now, at this point, it starts to head lower. So what most traders say is, hey, we're in a downtrend, time to exit, time to get out of your trade because it looks like we're going to be probably making lower lows as we go lower. But according to strategy number 1, this wasn't a downtrend. This was simply called a pullback, meaning that we're still in an uptrend and price is just pulling back to better prices to buy. This is a buying opportunity. And it generated 3 buy signals right here where most traders would have thought we were starting a downtrend. And look what happened. In the following weeks, the stock was 35 points higher. These were all strategy number one signals. Here's another one, the Australian dollar. Obviously, we're going lower, right? We're in a downtrend, but then we start to firm up. In fact, we have some really nice upward days here, a really strong upward day. So it looks like we've completed the downward move. Now we're going higher, right? Well, not according to strategy number one. An uptrend has not begun. This is simply a pullback in an overall downtrend. This is just a little bounce while the trend is still going lower. And in fact, if you applied strategy number one to this, it would have generated a sell signal in the Australian dollar right at the high there. And the market fell 460 pips in the next month. That's nearly $5,000 per unit if you had sold it. Another example, here's a 4-hour chart of the Canadian dollar. Obviously, it's going higher, but what appears to be a downtrend is not one at all. It's a buying opportunity. It's a pullback in an overall uptrend, and strategy number one generated 3 buy signals right at that low of the downward move, and in the next week, the Canadian dollar was up 300 pips. That's roughly $3,000 per unit, potentially you could have captured. And lastly, this stock, IIPR, as you can see, it's heading lower. But it looks like things have firmed up, making higher highs, higher lows. We're in a full-fledged uptrend. We've bottomed out, right? That's what that guy says in that chat room. But once again, strategy number one only looks at market behavior. This is not an uptrend. This is simply a bounce in an overall downtrend. We call that a pullback. It's pulling back to higher prices, which is giving you a selling opportunity. And it automatically generated 2 sell signals right here at the end of that upward move. And what happened to the uptrend? In the next week, it was down 35 points. These were all valid strategy number one signals, and you will be privy to all of the rules, entries, exits, and stop placement variables in this 3-hour course. A year from today, you will have wished you became a member of the Secrets course. Let me share with you how simple it is to become a course member. All right? Remember, this is 3 hours of trading techniques plus a full strategy. Now, normally on my sister site, Pro Trader Strategies, they have this course listed for close to $1,000. Here's what we're going to do for all the people attending today. We're going to discount it for a very limited time down to only $37. Think of that, $37. You probably can't go out for lunch for 2 for less than $50 these days, but for $37, you'll have more than 4 to 5, close to 5 decades of tips, techniques that I've accumulated, and they're yours to keep, okay? This is for a limited time only, though. You want to take advantage of this. For $37, I don't think there's a better way to learn all the things that have taken me years and decades to accumulate. On top of that, you're going to get the complete rules to one of our best pullback methods, strategy number one. Here's how to take advantage of this great offer. Contact my sister site, Pro Trader Strategies. I would highly recommend giving them a call at this number, 310-598-6677. They have trading consultants manning the phones right now. They'd be more than happy to take your order over the phone or give you more information about what we offer for all of our courses or different trading techniques or tools and indicators, okay? Now, that link you see at the very bottom is the link that will take you to the info page. You can also sign up online if you like. It's not a live link, so we have posted a live link in the chat box. So if you go to the Zoom little line there, the top, I believe it's a icon page there, you'll see a little sign that says chat box. Just click that on and you'll see that there's a live link posted there, okay? And remember, this is for a limited time only. Most likely this time next week, that offer will go back to $1,000. There's that much information jam-packed. So be sure and give Pro Trader Strategies a call. Remember, give them a call, 310-598-6677. They're there to work with you. They're very flexible, and they'd be happy to give you any information you're interested in knowing about not only this course, but anything else we offer at Specialist Trading, okay? As we close now our educational presentation and have one last look at our disclaimer, I just want to thank you for taking time out of your Wednesday to see and hear me speak in this educational presentation. But most especially, I look forward to all of you becoming students of mine in the Secrets course. Thank you so much. Be sure to give Pro Trader Strategies a call, and I hope to see you in class. Bye-bye.